Hey, what is going on, guys? Ethereum and Ethereum Classic have some interesting history, especially the way they split. So, in today's video, we will look at the historical event that caused the separation between those two, and we will compare Ethereum to Ethereum Classic. The DAO attack is a result that caused Ethereum blockchain to split into two. It is important to know that Bitcoin and Bitcoin Cash split into two as well, but the old original blockchain that reached majority consensus remained Bitcoin, while Bitcoin Cash became newer chain with a relatively much smaller number of consensus. In Ethereum blockchain, the opposite has happened. The newer chain became Ethereum, while the old chain that didn't favor any changes to the code renamed Ethereum Classic. What is DAO? The Decentralized Autonomous Organization, or in short DAO, was developed as Ethereum smart contract that was going to revolutionize the way we thought about Ethereum. The idea behind it was supposed to be a decentralized venture capital fund that would invest in potential decentralized application and earn returns for initial investors. This was seen as an amazing project that attracted a great deal of interest from thousands of investors. In total, the DAO crowd sale was able to raise 150 million in Ethereum with only 28 days. It was also estimated that at least 15% of all Ethereum in circulation was invested in DAO. In order to give users the options to opt out of any investment that they really disapproved, they could access through something called split function. This would allow investors to get back Ethereum that they had already invested in DAO. However, this also had one critical flaw in that it could also be used by hackers to extract funds. This was viewed by many people as a loophole that was never corrected and eventually led to creation of Ethereum Classic. The DAO hack. Hacker was able to make the most out of this vulnerability. He was able to hit the DAO and take away about 50 million of Ethereum from the fund. When such a large amount of funds was stolen, this would no doubt has a massive impact on the relatively new Ethereum community. There was 28 days waiting period that the hacker had to wait in order to take out his Ethers. Within this period, developers had to think what is the potential solution and reasonable action to take. Some people of this community viewed this situation as a mistake of DAO, and there should be no action taken, because the code is law and the blockchain must remain immutable. However, majority of community wanted to lock down the funds of the hacker and make sure he would not be able to move them in any transaction. Then they considered a soft fork solution. But unfortunately, soft fork wasn't the best solution because there was a potential for denial of service attack on the Ethereum network. Additionally, the hacker could still make number of transactions and fool the network. So, the only way for Ethereum community to effectively shut the hacker out of his funds would be to implement a hard fork. The hard fork differs from the soft fork in that the changes are not backwards compatible. This means that once the hard fork is implemented, no nodes can be operated on the old code. They will all have to be updated for the nodes to run. In the case of Ethereum, this hard fork would be implemented on the block that was just prior to DAO attack. In this case, it would be block 1,920,000. This would mean that before this block, the old and new chain are the same. After this fork, they are completely different. On the creation of a new chain, developers would have to run a smart contract that would have returned all the funds that DAO was able to raise and give them back to initial investors. This caused a great deal of disagreement in the community. Many people were saying that this is a contradiction to the centralized network. They were opposed to the idea that developers could change the network rules and rewrite the code. This disagreement was the last launch of Ethereum Classic. So Ethereum splits from Ethereum Classic through a hard fork implementation. The biggest people in the Ethereum community included the most influential developers supported a hard fork of Ethereum. For example, both Vitalik Buterin and Javin Wood, who are the founders, decided that this was the best choice of action to take. Now that we know all the circumstances that led to the hard fork, let's compare those two coins. Ethereum Classic versus Ethereum. If we look at the performance of both coins after DAO attack, it is clear that Ethereum has substantially outperformed Ethereum Classic. You can see the price comparison of two chains in the chart from the coinmarketcap.com. If you would invest in Ethereum Classic in mid-2016, you would make 17 times your money. But if you would invest in Ethereum from the same date, you would generate 40 times your money. That's a big difference. This is due to a number of reasons. Given that a hard fork is not backward compatible, any changes that implemented on Ethereum network will not be compatible with Ethereum Classic chain. Since the split from Ethereum Classic, the main Ethereum chain has undergone a number of fundamental changes and improvements, which include mining changes, confidential transactions, and so on. Those updates and the range of decentralized applications and ICOs that have been built on Ethereum platform have further driven mass adoptions of Ethereum chain. Let's look at some pros and cons of Ethereum Classic and Ethereum. Ethereum Classic. Pros. Stays true with the philosophy of immutability of the blockchain. Cons. Doesn't get access to all new updates made in Ethereum blockchain. Ethereum. Pros. Has majority of original players who have created Ethereum. Has reversed DAO hack and gives stolen money to its owners. Has the higher hash rate than Ethereum Classic. A powerful example of what Ethereum community is capable of when it comes together to solve problems. Ethereum backed by a powerful group of over 200 corporations called Enterprise Ethereum Alliance. Cons. Goes against the policy of immutability.